what's up, beginner trading family? Okay, so in tonight's class, we're going over trading and understanding the VWAP bounce. It's one of our favorite long setups and can be really effective in volatile markets. And in this class, we break down the favorable conditions, plus use on-demand examples. If you're interested in following along with us, we'll include a link to our public Discord channel in the description, and that also includes a free day trading chat. If you're interested in checking out TradeNet, they currently have a sale on their base package, the intro package, where you can get it for 30% off at $350. And that package comes with a funded account with $14K in buying power with a $700 max loss. But there's no PDT rule, and so new traders specifically can day trade as much as they want without necessarily risking what they would if they deposited thousands into a regular broker. And so for new traders, I think it makes a ton of sense. And if you're interested in checking that out, I'll include a link as well in the description. And so thanks for watching and enjoy this video. Alright, so the first strategy we're going over today is the VWAP bounce, okay? And we're really going to try to break this down so you can kind of see the different conditions, the different levels to watch, and kind of set yourself up for success in this trade. It's probably my favorite long strategy at this point. I think it's probably one of the most reliable ones. And so for that reason, let's go ahead and break it down. But keys to the VWAP bounce: 1. Documenting pre-market support and resistance. This is huge with any type of trade you're going to get in, is looking at the pre-market support and resistance. Also documenting the daily resistance on the daily support and resistance. That can be beneficial as well. The second process is understanding the possible catalyst and trend, especially with long setups. A lot of times when they're popping up on your watch list, there's going to be a specific catalyst or trend, and you want to analyze both of those. I think we mentioned before in the catalyst class with Mitch that FDA approvals are really good. Positive trial data for bio stocks can be really good as well, and so those are a few to look at. But once we really start to approach this trade, we're looking for the first real condition I want to see with this type of trade is a bullish cross over the VWAP. Like a lot of times I'll see the stock and I want to see it break over that VWAP area. If it opens up above the VWAP, a lot of times it may just continue to head back down and cross under it. And so I actually prefer to see it that cross over the VWAP, that break over the VWAP level. And really, it's just a preference. You know, that doesn't, in my opinion, step 3 doesn't necessarily have to be there, but it's one of those conditions I've noticed that can be beneficial. And at that point, you wait for it to pull back to the VWAP once it breaks out. I love to use the pre-market high as either my risk level or for where if the pre-market high and the VWAP are right around the same area, that can be a good entry point as well. And maybe you can use another support level in pre-market as your risk. And then as always with most trades, you're riding it up to the next resistance level for longs. And just like the VWAP fade, I try to take a partial at the high of the day. Because a lot of times a stock will go back and forth. It will test the high of the day, get rejected, come back down, consolidate, eventually go back up and test the high of the day. And so I think taking a partial at the high of the day is the safest way to approach this trade. And then you can ride the rest up to the next resistance level. Okay, and so we can look at the graph here. I tried to document it as well as I could with just a good example of the VWAP bounce. So you can see what I like to see is this cross over the VWAP here. Let me pull out the pointer. Okay, so you can see this cross over the VWAP here. It crosses over the VWAP. At this point, I'm analyzing this pre-market high. I really used to like trading breaks of the pre-market high, but a lot of the time they're going to get rejected and come back down. And so you can kind of, when I used to trade the pre-market high breaks, I would kind of buy it right when it broke that high, and it would just kind of curl back up, and it would fake me out a lot. And so I think a smarter way to approach it is to use that area as your risk once it solidly breaks that pre-market high. And so you can see cross over the VWAP, pull back to the VWAP area, and this is something you'll see a lot. You can use this pre-market high area as your risk. Okay, so it pulls over that pre-market high. You can use this area as your risk, and you take your first profit like this says here at the previous high of the day. You can see the previous high of the day here. You can take your first partial here. That way, if it gets rejected at that previous high and comes right back down, just like the VWAP fade, just the same way we approach the VWAP fade, you will already have taken profits. You'll have some money in the bank. And so even if you have to get out for break even when it breaks your entry or your risk level, it's still either going to be a small winner or a small loser, maybe a break even trade. And then obviously you take the rest at the next support level. This is all personal preference, this last exit remaining at next resistance. Of course, if you take a big enough sizing, you can take some more here and then just let it work. Sometimes you'll have an all-day runner, as opposed to on the short side, sometimes you'll have an all-day fade. And so it all is just personal preference with regard to the second exit point here. But this is basically just, like I said, what I want to really get across is that the conditions I have found that are favorable with the fade are crosses over the VWAP right around the open, using this pre-market high as your risk, and then taking a partial at the previous high of the day. Okay, and so we can go over some examples of those using on demand. I think that's really going to be beneficial and, to kind of break down the trade with Mitch and I. And so let me pull that up really quickly here.
One of the biggest things that I like really with that VWAP bounce is, like you see on that trade example, is that you see it does that red to green and then you get the VWAP bounce. I think that really helps the trade.
The washout long?
Yeah, the washout long with it. When you get that kind of buyer's remorse at the beginning of the open and they kind of just they sell out their profits, it's usually long-term traders that are giving out their profits, and then you get some bag buyers to hold it at the bottom, and it really creates that momentum as you see those two big bars that rip through the VWAP,
Right.
And that's really where it comes from. That's where this whole surge comes from the people that are down there. And once it gets up to that next level, that pre-market breakout, like we know, there's a strategy that trades there. So what happens there is understanding the psychology that people buy there.
Right.
Buyers get long there, and it actually pushes it up again. And you see those two big bars come again right after that.
And
that's what volume does, guys.
Exactly. And another way to think about this, right, is that if you take what we talked about the other day with regard to trends, specifically intraday trends, the VWAP, when a stock breaks the VWAP, that's kind of a confirmation and a trend change. And another confirmation and a trend change is a red to green move, and so it's kind of like two trend changes happening at once that just make this stock really, really bullish. So the first one, like Mitch is saying, the red to green move, when this happens, especially when it crosses over the VWAP here, that's signifying a change in trend. It was originally a little bit of a bearish trend. You can see it started to drop down here at the open, and then it crossed over the VWAP, changing trends. And especially when it breaks the pre-market high, that's just confirmation in it as well. And so with most long setups, a lot of people dip by morning panics. Usually when there's a VWAP bounce, and I can leave this going, I guess, but usually when there's a VWAP bounce, it's going to be when the stock is gapping up. It can sometimes be when the stock is gapping down, but the reason I like it when the stock is gapping up is because that pre-market high can act as that support or resistance level. That pre-market high can be, you can either use it as your risk, or if it's around the same area as the VWAP, you can use that as your entry point. It all is just trade specific. And so a lot of times when you're going to see the VWAP bounce, it's going to be when the stock is gapping up, using the previous pre-market high as your level. That's kind of the biggest level to watch, is the previous pre-market high. And I think you'll see why as we progress in this trade. And so as this is setting up, I'm just going to mark out all the different support and resistances in this trade.
You see how there's a big bid there? There was 100 bids down there at 480s. That's why it got scooped up. There was 100 bid there, and those shares got bought up right there.
What is that, 10,000 shares?
Yeah, that 10,000 shares is bought up there at 480 real quick.
And that's a big position,
That's what I mean by what I call a bag holder. He's holding the bag down there.
All right, so again, like we said, cross over the VWAP. That's the first kind of indicator that I'm going to start looking for a VWAP bounce. It had a little bit of a bearish wash underneath here. And then just like Mitch and I said, it crossed back over the VWAP here. Yeah, Teddy, I think it's really good to just stick to a strategy and just, like we said yesterday, like Bruce Lee says, it's better to practice something 1,000 times. It's better to practice one thing 1,000 times than 1,000 things one time. You know, that way you'll really master the strategy. You'll be super comfortable and confident in it because you'll know it so well. And then once you kind of master that one, you can kind of progress and learn and really focus on others. But I think...
See, the bidders, I think we should rewind it a little bit, really show them that they need to see the orders go through there. Pay attention, guys, to the level 2. You're going to see 21,000 shares appear. You're also going to see 100 bidder again show up on the bid side. And that's really what I mean by learning how to use the level 2 and the time and sales to your advantage. When you're seeing strong momentum go towards the stock and you're seeing big ads come up on that ask, or a big order get thrown up on the bid and it immediately absorbs that order and rockets up, that's someone trying to, what they do is they put an order out on the ask and they put an order out on the bid. They're trying to take big sizing. They're willing to take it on the ask and take some sizing on the bid, and it scoops up all the volume that's there and creates this drive and momentum.
For sure. See, let's see if we can find it. I rewound it about 25 seconds from where you said that.
Yeah, you'll start seeing it. So it's pulling back, guys. A lot of people try to get those pullback entries, right? So you guys are gonna start seeing when it starts ramping
there
up.
There it is, that 142.
142, and then look to the.
It's gone. It got taken out, man.
Yeah, really quickly, and that creates big momentum. Look on the right-hand side, 6,000. It just swings there, just mad volume just starts getting through the time and sales. You see that 21,000 shares? There's 21,000 shares right there. 512, right where I told you it happened. Boom. That's him right there, putting 10,000 on the ask side, 10,000 on the bid side, and taking that juice.
It's just orders getting filled on the level 2. Like when you see an order get taken out that quickly, it means it got filled, or they removed it. It's either or. But when you see it on the bid, that means it's a buy order a lot of the time.
So the way you get confirmation is you see the sizing on the bid side, and then you look at the time and sales, and you want to see a big share volume show up there. If you're not seeing the share volume show up there, then it could be either hidden volume or that they took it off. They just showed the order just to spam the stock. And some people say this is illegal, but everyone can do this. Yeah. Everyone in a real execution can spam an order into it, put 10,000 shares on the bid, and then immediately remove it, and it causes an actual fluctuation.
Yeah, I just saw a 25,000 order flash on the ask. It was probably somebody trying to scare it down.
No. And it happens, both ways, Imagine if you showed it right there at like 518s and you're holding to the high of day. There's people that like shorting at the top.
Right.
But let's get back to the strategy here. The real key is I wanted to really show you guys what I mean by kind of that big buyer stepping up or the big seller in shorting cases.
Right.
All right, so this is where we really start getting that rocket again. Remember that buy happened at 512s. So you want to see those 512s get scooped up again. Immediately when it gets to 512, that momentum come right back into the stock.
Right.
You see how it happens? Boom, and it starts rocketing up.
Here it goes. And this is where you're really going to start looking. For one, you're going to look for the VWAP to pull up a little bit. And number two, you're going to look for a big spike over this pre-market high.
So one of the key things also in this trade is having your established risk. So before it comes to VWAP, you got to know where you're going to risk off on this stock. If you're going to attack this VWAP bounce, I would recommend that 510 area
Yep.
or immediately below it, which is 509, which is where you got that support line.
Right.
That's going to give you a nice 5 cent risk or 4 cent risk, and your profit should be at the minimum up there to
530.
540. Yeah, I would say you could even attack the 540.
Right.
And then your second profit be up there at 5 at the higher day.
Right. And so to look at it like this, so when you're in this trade and you see this pullback to the VWAP coming, like Mitch is saying, where's your risk going to be? I think I would probably like my risk to be at this big support and resistance level from pre-market at 507. The one I mapped out before I let the open happen on here, so right here would be my risk. Let me remove this. And so if the stock breaks that, I can get out of the trade. It's resistance here, it's support here. And so you can see it confirmed this level multiple times. One right before the open here, and one in pre-market here. And I'm sure if you go back, it's probably a big support and resistance level. So 507, a reasonable risk if you're getting in around the VWAP here. And then like Mitch said, where do you want to set your reward for this type of trade? If you want to get a bare minimum and you're more of a scalper, I think 530 would even be reasonable here. If just because you're setting such a tight risk. Or you could set it at the high of the day, which is really the conventional way I think you can approach it. That's how I usually try to approach most setups, is setting that if I'm bullish, high of the day is my reward. I think that's the most reasonable area for it to pull back to. And if I'm short, the low of the day. So in this case, just for this example, we'll go ahead and just set this 540 level as the reward area right here. And so risk is, let's draw it out really quick. Risk, if let's say target entry 517, 518, this is your risk. And really, this would be an ideal entry since we kind of know what's going to happen, so we can just maybe draw it here. This is your risk, and this is your reward. So you see how much bigger your reward is than your risk if you base it off of these levels here. And that's what you want to do with each trade. Tight risk, big reward. And same thing with the VWAP fade. You just want to keep your risk small, understanding it and basing it off of previous support or resistance levels. And then you want to keep your reward big enough to be able to have try to get at least 2-to-1 risk to reward.
Yeah, I really try to look at these just like a VWAP fade. And in a VWAP fade, we would try to enter near the VWAP. We would risk at the resistance. In this case, it's going to be the support. And we're going to take profit at the first support. In this case, the first resistance.
Right.
The first resistance, in this case, you could make a case for that pre-market high of day, but I see what I call like kind of a fake kill candle there. It's like a fake out there. All the longs are kind of getting rid of their positions, and you're going to get a bounce. The bounce is psychological. It's
right.
Panic. And so that's what we're doing in this move. Just like in the other move, we're getting the panic the opposite way. We're getting everyone that's kind of panicking out of their early short position. So many people kind of just chase at the beginning, short, and then the stock bounces up to our level, and that's why we get to capitalize.
Right.
In this one, so many people are jabbing on the buy button, and they get stuck up there at 540. Then when it comes and breaks at 530, they all sell out, causing the panic, causing this dip really fast to the VWAP.
Right.
This trade is a little quick. I will let you guys know that. It's not a really slow trade. It's one that you got to do it the same way in the VWAP fade. Already looking at the VWAP, knowing where you're going to risk so that when it approaches it, you're ready to make your move.
Right. Exactly. It's a lot of times the VWAP fade happens lightning fast. You have to just jump in. It might tap the VWAP and then immediately fade back down. And that's why we say a lot of times when you enter into a really good VWAP fade, you're immediately green. You're immediately profitable in that trade and you're comfortable because you're green. Same thing with the VWAP bounce. A lot of times it's just going to pull back to this VWAP really, really quickly and you just got to jump in. And if you've been watching it, along the way as we have, as it leads up to this, you want to start analyzing these levels like we did here, mapping out big support and resistance levels, kind of forming your plan as it sets up. And so we can go ahead and start it. All right, so this pullback up, wrong button, sorry.
Oh, whoa.
All right, so pull back to 520, that's a reasonable area to take it. Why did I take it there? Because this area might act as support right here. So it does have a little bit of resistance here possibly, but this can also be support. And so just in case, for the sake of this example, we're just going to take it here. And I'll go ahead and buy another 200. I just want to get into a decent sized position that allows me to give an example of scaling out of it as well. Plus, you guys know me. I jump in early,
At least you don't get out early,
Right. I hold it to my levels for the most part, But, and it even got down, you see how quickly it got down to 518, and then it just immediately bounced. It went down to 518, and then immediately bounced.
That's why a lot of times with these, I say have that order out there. Have that 518, 516, just put it out there. If it gets filled, just be ready to cover at your mark. That's all you got to do. You might get those, what I call a sweep buy, where it just picks you up and immediately it's back up there to that 530. So this is why I say 540, because in this area right here, you're gonna get that reverse surge. Everyone's like, oh man, I made a mistake. Everyone starts buying it up. Right about here is where I'd probably sell a little bit of shares in that 37 to 38 range. Right before it tries to break out, I want to get rid of some to take some of the pressure off me. Now, once I have that pressure off me, guys, it's the average. 100% if you're break even. You are not losing 1 cent on this trade from this point on. You can sell half of it. And now let it work. Now what you want to do is I recommend in looking to sell some there at that 550 breakout. You have to look at the level 2 really and see if there's going to be buyers that are going to step up here. If there's no buyers that are going to step up here to really get it past that 550, then you kind of want to go ahead and get rid of it probably in the 530s.
Because realistically, I can sell
pause. Hit the pause button. Boom. All right, perfect example, guys. What did we see when that surge of volume went through there at 45s? You guys can see it here. It starts at 39 here at the bottom. You start seeing some volume there, really. Goes to 43s, 40s, and then out of nowhere, the time in sales, you see 545s, 3,000 shares, 3,800 shares, and then 545, there's 10,000 shares that go through, and then a whole bunch of shares just immediately right there.
Right.
At 550. The whole dollar, half dollar, always act crazy, especially for longs.
Right.
When longs, you definitely see them with breakouts on whole dollars or breakouts on half.
Right.
And so those ads come in there. They're psychological ads. They're people that know that people buy there, and they go ahead and jump in. They're willing to risk off that 540, and they're willing to let this ride. And so when you see that amount of volume pick up there, then you can let your shares kind of go with the momentum. What I mean by the momentum is let it keep surging until you see that first wave of red, and then you sell another little bit.
Right. And another thing to think about this, and this is something that a lot of traders should really understand, is that why did this area hold as support here? It held as support because 1, pre-market high, and 2, VWAP. And so not only was it and resistance here, and so you have all these different support levels combining to equal one big support level. And so what happens? The stock gets a really big bounce because some traders are looking for it to hold support at the pre-market high. Some traders are looking for it to hold support at the VWAP, like us. We're looking for that bounce off the VWAP. And some may even be looking at this little resistance level, wanting it to hold support there as well. But all those support levels combined to give it this big bounce. And again, the same thing with this. Okay, so this is not only the $0.50 break. But this is the break of the previous high, which is almost exactly at the same point as the $0.50. And so it's more than one strategy combining. It's the break of the $0.50, which makes some people that are trading half and whole dollars buy it. And then it's the break of the previous high. And so you have some traders that are trading it looking for the break of the previous high. And that's just going to give it twice the momentum to continue in the direction you're looking for. And so the more setups or strategies that are combining simultaneously, the more reliable that trade is going to be a lot of the time, because there's multiple different types of traders looking at it. There's multiple different resistance levels breaking, meaning the previous high and the $0.50 as resistance here for this breakout. And for support, there's the pre-market support, there's the support at the VWAP, traders trading the VWAP bounce, and there's this resistance area here. And so you get all these different levels combining to give it much more momentum. And so you should look for these, like I said, with this, I really like it when either A, I can use the pre-market high as my risk level if it's high enough and the VWAP is actually high enough, or B, if the pre-market high and the VWAP are right around the same area, that gives it twice the momentum of support for it to bounce, if that makes sense. All right, so we could just keep going. After it breaks this $0.50, a reasonable plan, depending on how long you're really looking at holding it. I've scaled out of it nicely with 200 shares, got a really nice gain there at this point. You could either go for the $0.25, $5.75, a lot of people do, but really you can look back at the previous history of the chart here. And so we can go back. It's above this already, so let's go back a little bit further. And let's mark down these areas. Let's see if it's going to follow any of those.
Yep, that's what I would be using. I'd be looking for that 660 push, and then also, like I talk about, watch the time in sales and the change.
Right, remember what I said though, 575. I think that's a reasonable level to take the rest of that risk. 660, I mean, that'd be a whole nother $1 up from where it's at now. But I really think this 575
I thought it was 560, my bad.
Right, no, it dropped a lot the next day apparently. But you can see this 575 level, like I mentioned before. I think that area might turn into resistance. I think that's a reasonable area to consider selling it. It's at 560, that's another 15 cents. And so we can start it. And then after this one, we can go through another example. And once it really breaks over the $0.50, I think that's a reasonable area to set your risk at once it moves up as well. You could set it at this 540 level where we took the first profit. And so as it really gets this big momentum bounce, you want to start analyzing and adjusting your risk level.
If you have more shares, at least in my eyes, that's kind of where I sell my first little shares, by the momentum slowing down there and doing the 1 minute pullback strategy. I want to go ahead and get rid of some right there. Just not much, but if you have, like, let's say 200 shares there, and you get rid of 100, you can literally leave the rest, put a stop, and let it keep going. That's what I do on the VWAP fade. That's what I would do here. Let it keep going, because you never know, really.
Maybe set a risk at this 550 level and just let it roll.
As long as you take some profit,
Right. I think I took that second profit or third profit right at the $0.50 once it broke at like 55. So like I said, here's the push. Let it get up to 575. Take the remaining off. There's that line I drew previously. Let's see if that area holds as resistance. Let's see, a huge level. It went it went to 573. Just about 574 really. 574 would be here. So it went almost exactly to that 575 level that we drew previously, and it got rejected. Another pullback right to the $0.50, still holding that $0.50 beautifully as support there.
Yep.
And so yeah, 575, take that right around that previous high, take the exit, and be done with the trade. And get a nice gain with a few shares using the VWAP bounce strategy. All right, so we can go over one more. All right, so again, a lot of times I'm going to see a VWAP bounce with gapping up stocks. And I really like using it on gapping up stocks. Why? Because I can use that pre-market high and that pre-market support and resistance areas to base my trade around. And so as this one starts to fade down, again, one of the big things we look for, I can kind of map out the support and resistance lines on the chart. Alright, so first thing to touch on is that, again, it did the exact same thing as last time. It had a washout long here, and it crossed back over the VWAP. Of course, it opened up above it, but we'll still consider that a cross for argument's sake. But again, big red candle on this one as well, and a washout long breaking over this high here. And so do you see also, again, what I did when I got ready for this trade is I mapped out the big support and resistance levels in pre-market, and I'm starting to look for, one, a big volume break over this pre-market high. Why do I really want to see that? Because it needs that volume spike to pull the VWAP back up to make it a viable VWAP bounce. You know, if it doesn't get this big volume coming in on the pre-market high break, then the VWAP's going to be a little bit too low for this strategy. All right, we see the big spike breaking over the previous high. And there's the big volume spike. Like I said, we need this volume spike in order for the VWAP to pull up. Because, like I said, if the VWAP's not up enough, it's not going to be a viable VWAP bounce. You know? I'm just going to make this one easier and take it with 300 shares. But at this point, beautiful breakout, beautiful run over the pre-market high. And you can, if you're looking for the VWAP bounce, this one definitely could be a viable option. And again, do you see what's happening here? This is really going to get my attention to it because the VWAP is right around that pre-market high. And so again, like I said in the last one, that's going to give me a lot of support there to get in on a VWAP bounce. Because not only is it the VWAP acting as support, but it's this previous high. And I can buy it here with my 300 shares. So at this point in the trade, I can start looking at, let me pause it. I'm rushing through it a little bit because we have class, but there's a few areas I could set my risk at this trade. I think the most reasonable area is probably this 84, 83 cent point here. Because why? It was resistance in pre-market, so it's probably going to turn into more support here. And so we get a quick pullback to the VWAP, and like Mitch says, sometimes it's going to happen fast.
I'm not stressing about this trade because I understand my risk level, and the only thing I'm thinking about is if I need to, I'll get out. If it goes, it goes.
Right. You have your risk determined. The trade's easy. If you map out your levels, the trades are going to be much easier because you know where you got to get out, you know where you're going to take profits, and you know where your risk and reward levels are. All right, so we get this move up. This is where you consider start taking your first profit really close here. We'll let it test that 810 level. Here, I sold.
There you go.
Hey, I'm so used to shorting. It's just covering is like automatic buy to me.
And you see why we sell a little bit, guys, because this gives you an ability to, if you want to, increase risk here, because you feel this stock, really got some good buys up there at 810. You can put your risk essentially right back on here. Your average price, go ahead and buy some there if you want, John.
Huh? What, add it back?
Yeah, add back some size there. And what it does is it gets you right there. Now you have an average right there. Your risk is $7.93, 5-cent risk. You can sell some of the shares that you just bought right back at 810 and look for the breakout.
And it's a very similar approach to what we do with the VWAP fade. If it fades off the VWAP and it gets to our first profit level and we take profits but then pulls back to the VWAP, we can add our sizing right back and do the exact same thing. Wait for it to get back up to that support level. For argument's sake, I might just take some off. Well, I'll wait for 810, I guess.
You're starting to get that flag action.
Right.
And with that comes that. And so now you look to sell some right here. You can sell some right there. Boom. And now you can look for the breakout on the rest.
Let the rest work. You've already taken enough profits in this trade to where even if it pulls back to your original risk level, you're fine. You could just let the rest work.
Yep.
And that's what you want to. That's the position you want to get yourself in trading. That's the ideal position to where you've taken profits, you've already banked some money, and so you really don't have to worry about it turning into a losing trade. And that pulls so much pressure away from you. You have much less pressure at that point.
10,000 share buyer there at 815.
Right.
Lets it go to 820. You can sell some there at 820 and let the rest just break even and let it ride.
Right. So we can also look
at
previously
levels
in the chart and look at the old levels as well.
Always.
And so we get this big level at 8 here for that breakout. We have this level at 820, like Mitch is saying. I really like that level. I think there's a lot of resistance there and support. Why? Because if you look at the previous few days, look at all the support and resistance at this 820 level. Here, 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 support here, obvious level. Then the next level could even be this 840 or 850. It's all preference. You can either do the $0.50 or you can do 840.
Like Tiny says, we'll take the meat.
Right. Take the meat of the move. That's all you're looking for.
840.
And that's the plan. And you just let it work.